Good morning. This is Vince Lanci. It is 11:15, November 15th, and this is the Gold Fix. Title: Don't call it a short squeeze, which is a pet peeve that I have. But let's get through some information that's relevant, with the focus being on Brexit and trade. Gold rallied late in the mid to late part of the day yesterday. That was on trade, not on Brexit stuff. Let's go through it quickly, though. All right, bonds are up, stocks are down, with gold neurotic at midday yesterday. And then a break higher, gold surge most likely on newfound optimism on trade talks. We are not so sanguine, but it is helpful for swing trading. All right, one likely scenario is this is a scenario we ascribe to. It doesn't happen on a minute by minute or day to day basis, but we think QT will continue to drain US dollars in the world. You want to take it to an exaggerated point. There's only $1 left in the world, and there's trillions of dollars in debt, and that dollar is worth infinity compared to other fiats. Um, this will eventually come home. I believe, we believe. When I say we, I mean my firm, my group, not necessarily Opportunistic Trader. Gold will drop with stocks because of the drainage in the markets. Things will be sold, just like Venezuela sells gold to deal with their own problems. And then you have what I call PDM, which is permanent debt monetization, which is, it sounds permanent. It's not permanent, but permanent debt monetization or permanent monetization of debt is an actual phrase. You can look it up Wikipedia, wherever. What it really means is you're issuing debt and you're rolling it further out as opposed to letting it roll off. And it's the end of QT. QT, if you're not that familiar with it, is basically the reverse of QE, which QT is we're going to take dollars off the market. So there's fewer dollars chasing things. At the same time, we're going to issue more debt. So it's kind of I guess it's kind of like the guy with a foot in a bucket of hot coals and his other foot in a bucket of dry ice. And on average, he's okay. So what you end up having is, well, that's a little bit harsh, but what you end up having is when we had QE, we had debt. We had sanitization of printing dollars. You print dollars, you buy debt, you slow down the velocity of money in bonds. And the reverse of that is you buy dollars while you're releasing debt into the market. So you're kind of restricting supply of one. You're lowering supply of the thing available to buy, the increasing supply of the other. So what ends up happening is, uh, uh, you know, it's classic. If there are less dollars, that's deflationary, um, uh, uh, and it slows down trade, it slows down economies. But you can pretty much figure that out on your own and look it up, or you can ask questions in the chat, or you can find me on Twitter, and I will certainly respond. But we're working on having questions in here as well. And I've been reminded by Tracy that today is Soma Day, and true to form, uh, well, not true to form, but historically, Soma has been leading leading into Soma. The dollar gets stronger. Probably some political thing there. Um, but if you look around today, I don't really even. I'm not saying that Soma isn't going to factor in, but Europe's got enough problems as it is, so the dollar is going to be strong. Well, the dollar has been strong based on the euro and the British pound, but absolutely, Soma is something that's going to just push the dollar stronger. So be aware that that gold could be affected lower today uh, between 11 a.m. and 2 p.m. As I'm being reminded by Tracy. That's important. Okay, so there we go. All right. So there's a chart for gold, the daily chart. Yesterday, see a rally. Today, we're a little lower to start off. I'm not. Uh, I'm not a. People are. I already saw short squeeze in a couple headlines yesterday. It just makes me It just makes me sick. But we'll talk about it later. Stocks were softer again. Apple continuing its descent from high flying tech stock to bellwether rail company. Sorry, Virginia, but Apple is a company that makes things. They're not an idea company anymore. It's not to say that they won't have ideas, but they won't be what they used to be. Thank you very much again for that, Tracy. The Powell put is a call option. Chief Powell spoke yesterday. He gave no reason for investors not to expect a hike next month. He offered a balanced view of the economy. He identified three general risks: slowing growth from abroad. We knew that. Fading fiscal stimulus. Okay, we knew that. The lagging effect of the past rate hikes on the economy. 8 since 2015. We think personally the Fed will likely deliver 2 to 3 more rate hikes before pausing. And I say before pausing because we're reassessing. Uh, uh, I think the question is, why does the dollar rally going into Soma? That's a question from XDM. Um, I don't really have a firm answer for that, but I think it's a part of a negotiation play. Tracy actually watches that a lot because how it relates to oil. But uh, the dollar rallies because of liquidity being drained, but I think it's a negotiation thing going into Soma. King dollar, it's for U.S. dollar hegemony. It could just be coincidence. I may not know exactly why, but I do know it does happen. Um, so far today, the dollar is mixed, and this is important. Usually, you can say it's mixed and brush it off. Asian currencies are stronger. That includes the Aussie dollar on trade optimism. Somebody farted that we're going to have a trade deal. But Europe is focused on Brexit and to a lesser extent Italy. We maintain the stronger and growing bond with the yuan for gold, and unrest in Europe and optimism for trade in China should be very good for gold. Okay, so you've got Europe in crisis. All right, let's just call it that for the moment. Take it to an extreme. You've got Brexit definitely causing political turmoil, which is bad for the British pound, which is not good for the euro as well. That could be seen as bullish for gold, but we're going to say no. It's more bullish for the dollar than gold. Let's just say it's a mixed bag against gold, at least right now. But in Asia, if you have perception of trade relief, you'll see a stronger yuan, you'll see a stronger Aussie dollar, and those are bullish things for gold. So net, the things in the market right now are neutral. Let's look at the indices out there now. The index. This is about as of a half hour ago. I'm looking live as well. The dollar index is 97.18 at the moment. Gold futures, which are pretty much converging. These futures, which are pretty much converging with spot right now, are trading 1209.5. Silver, which gave us a nice fake out the other night, reversed lower, went lower on a signal that I didn't trade because I'd rather sleep, as Larry notes, and then give us a nice violent reversal higher. That would have been a great trade had I been playing the 2 bites of the apple. Palladium and platinum continue to diverge. Palladium stronger and remain strong even in the face of the weaker stock market yesterday. Some people are trying to put palladium as some sort of a Dr. Copper. I don't see that. I see palladium more as the leading indicator of Chinese demand for metals. They buy copper, they buy palladium. Anything with a degree that's in precious metals has taken a job as an adjunct professor in an Eastern Europe university. That's my feeling on it. All right, there's the Chinese yuan, onshore and offshore. The yen, which I think people should pay attention to as a proxy for the U.S. stock market. If you're looking at cash flows, the yen carry trade, you short the yen, which costs you nothing in interest. You convert it to dollars, you buy stocks. Now, anyone who understands risk would say, but what if it reverses? Well, that's the thing. These things do reverse. They reverse over a long period of time. They usually reverse violently, but they can go on for years, and people keep doing it because they're not doing it with their money for the most part. The Aussie dollar, we're going to comment on that. The euro, a little bit higher, but anything off of zero is fine. British pound is down over 1%, and emerging markets are lower. Okay, data on deck today, 8:30 U.S. retail sales. So I'm going to try and be tight here. Retail sales for October, consensus is 0.5%. Weekly initial jobless claims, Empire Manufacturing, Philly Fed. You can find all this in better detail in the Opportunistic Traders morning report. Um, uh, and if you're watching the stock market, Walmart and Nordstrom earnings are out today, which may or may not have an effect on gold, but it could have an effect on gold. The point is, if you're naive enough to think that there is a pal put somewhere below where the market is right now, that's not at 2,200, then you can think that every time something bearish comes out on the market, Powell's going to pull back on QT. He's not. He follows the numbers. And when everyone figures that out, he'll stop following numbers. Yesterday's trade, oil was on our radar, and we got a beautiful trigger for opportunity and risk reward higher. I'm really good at reading my own words. Unfortunately, we were stopped out before the market took off. These things happen. And there's a trade blotter, the audit trail, if you will. So I bought crude, I got stopped out, and then I rebought it. And this is actually something you're supposed to do with the system I use. You're allowed to do it over and over again. I only did it twice because it is an expiring month, and Larry reminded me that on last days, markets tend to be a little bit more whippier. It was an expiration day for the futures. And I proved to be right, but not rich. The market took off after I got stopped out on my second. There's my second trade. I got out on a scratch, and I said to subscribers, just because we don't make money trading doesn't mean you can't. I said to subscribers, still bullish, cannot play. I cannot play because the system says I cannot play. If I were trading technically, I sure as hell would play. If I were trading options like a market maker, I sure as hell would lift someone's offer on a call and then just giggle at them as the market went higher. But you can also see Larry's trades in there. He had a good day yesterday. Silver, classic VBS, first way, wrong way. Not to obsess too much about it, but if you remember 2 nights ago, I think I came in here saying, got a nice signal on silver lower, didn't trade it, would have made money, and then had a reverse. If you look at the hourly bars, then I don't have a chart here, but maybe I can pop one up. You had a nice reverse candle, and then boom, it took off. It's just, trade volatility, folks. Trade volatility. If you can figure out a way to trade things that people don't watch. Don't trade the wiggles and waggles. Read people like Linda Raschke. Trade the things with less noise. Trade the Aussie dollar versus the Japanese yen because it's a one-off, but it's less noise. You may have slower moving. You may have to hold it for a day, for a month, but you'll have less noise to contend with. That's why I love volatility, even though I am an expert. Define expert any way you want to, but I've forgotten more about volatility than most people know about it. And by the way, as a side note, I use that line with my kids. I've forgotten more about brushing my teeth than you know about it. And my 10-year-old kid said to me, "So, Dad, does that mean you could theoretically know less about it than me?" And I realized that I'd done too good of a job teaching my kids to be wise asses. Other money. This is important. I'm not going to read all of it, but I really think today's the day you want to read up on Brexit, because if you're a gold person, little by little, you're seeing, and for the right reason, people buy a little bit of gold when they buy a lot of dollars. You're seeing it in Eastern European banks. And I'm not just going to go through the Poland-Hungary thing. What I'm saying is, in an environment where the dollar is being drained, countries that do trade with Russia and China are going, okay, we're going to buy a little bit of gold. And they're doing that because the market is moving towards a yuan-based economy. And it's not happening overnight. But the point is this. If you're going to do trade, if there's a trade war and all borders are closed off, you need gold. Okay, that's not going to happen. But if you're going to imagine a country that's reserves, that needs US dollars to conduct trade, and your reserves are being depleted because you're paying back your debts in dollars, and you're buying, and you're an importer of oil in dollars, and you go into the market and you buy gold, that's crazy. Now, either you're stupid, and some countries like Venezuela are stupid, buying gold for a store of wealth, but you need currency, which is liquid money, to pay your debts. But when you look at these countries on the Eastern Bloc, they're looking to their, I guess, stage left, and they're saying, more and more oil is going to be trading in foreign currencies. You've got a country like China saying, sure, we love to pay for oil in yuan. And if you're not really comfortable with our yuan yet, we'll give you a little backing implicitly with gold. You got Russia that wants it's just happening. People are selling dollars, divesting of dollar risk. And don't even get me into China. They've been doing it since 2004. I've seen it. And the lesson for me in saying that is, I'm the guy saying, oh, the dollar's going to zero 5 years ago. Do not underestimate incumbency. This can go on for a long time. In the end, it'll be the human beings making America great again. Will be good for corporations. Corporations don't need passports. People do. Let's not get into nationalism in nation states. Okay, outside markets. And I say that because you know what? Gold is always treated poorly. So let's just treat everyone else as they're outside markets. Gold is money. Everything else is nonsense. All right, energy. API estimated that U.S. oil inventories rose nearly 8.8 million barrels last week. If confirmed by the EIA today, it would be the largest build in more than a year and a half. A 12-day slide in prices was snapped yesterday, but there has been little recovery. Okay, futures expiry is mechanically bullish also, something Mark Fisher discusses. But when you have an expiration, usually leading into it, say a week or a month before that, you start having a rollover. So the longs roll or get out, and that's bearish, absent other factors. And as you go towards expiration, the shorts cover, and that will be producers or players with short hedges on. They want to take them off. So shorts cover last, longs cover first, and that's for several reasons. And um, so if you're looking at oil uh, uh, as it pertains to the market and as gold, uh, again, more information, more help from Tracy. Tanker Trackers uh, has a 4.2 million guesstimate on the EIA, which would be significantly lower than the API. The API is less reliable since the Enron debacle years ago, and numbers given by private EIA has also become less reliable. Um, but I'm being reminded again. Uh, you know, uh, uh, Tracy says Tanker Trackers has, or maybe EIA has been spot on lately. So the point is, if you're looking at API versus EIA, you always look for EIA to confirm API. You raise your eyebrow when API numbers come out. But we are going into seasonal shoulder, and please note the commentary on oil. If I stay on it too much longer, I think I'll lose all my gold people here. But the reason I bring up oil, aside from it being an outside market, is historically, when stocks go down, oil goes down and gold goes up. That's happened a lot, but it's not happening right now. Asian equities were lifted by trade optimism, and the yuan gained on the dollar for the third consecutive session, longest streak in 3 months. Um, uh, Helmets are needed for natural gas. Helmets and living wills, by the way, Mike and Gabe. But yes, that's true. European equities are mostly lower, with the Dow Jones off 0.4%. Consumer discretionary materials and energy resisting pressure. Technicals, Michael Moore. There's his chart. There are his numbers, the numbers that matter to me. If you're swing trading above 1217, you want to be bullish, reverse back through that. And if we break below 1208 and back above, look for that. So those are his inflection numbers. Putting up an hourly chart so you can see where gold is. A word about levels today for VBS. Um, uh, yes, I've been made a widow by natural gas several times, and I've actually widowed a bank one time. That was fun. You can ask Bank of Montreal how their EOO position is in 2007. Um, that's something I won't be falsely humble about. Live charts. Okay. We'll get to those in a second. A word about signals, profits, and reversals. No, I'm not going to answer that today because we're running tight. Okay. Looking at the 240-minute, I put that up there because we have a potential signal 240-minute. I'm looking at this is spot. This is not futures. So add about $1 to it, maybe a little less. But there'll be an equivalent. I'll post it in the chat if a trade goes off. But above 11, above 12, 10, 80 on a 4 hourly basis. That's about half hour from now or an hour from now. Um, I'm going to look to get long below 1198 and change. I'm going to look to get short. 1198 and change is right around a number, several reasons, several numbers. 1197 is a number that I had. 1197 was also pointed out by a subscriber, XDM. Thank you very much. 1197 is a GAN number. I believe in GAN. I just can't look at the rainbows. I understand what it is. It's kind of a speed line. I'm looking at this 4 hour chart, and this is what I'm worried about, those wicks above. As a simple technician, I see that as trapped selling. I'm not buying this optimism nonsense. The last chart is just a little throwback. In, I don't know, September, late September, I put this out there and I said, gold's going to have a macro move, and it extended outside and reversed inside. You see that little green candle there, and then I was like, okay, we're gonna go back to the top of the range, and we did not. So, but at the same time, I also said that we should be long with a stop out on new lows. So you should be long with a stop out on new lows if you're holding this for 6 to 12 months. Learning moment. By the way, the bottom part, Brexit path and gold psychology, read that if because it's a political process now, and whenever people are involved, idiocy is involved. So pay attention to that. If for no other reason, if you learn how if you understand the process in England and this Brexit process, you'll also get a little bit more political experience in dealing with infighting in Europe, as well as Trump's style in dealing with things. The learning moment is the title. Dear press, you don't know what you're talking about when you say gold is in a short squeeze. There is a term, short squeeze, that has a meaning, you idiots. Short squeeze, you don't have a long squeeze, you have a short squeeze. Short squeeze originates when you are, because of fractional reserve banking, as it applies to equities and as it applies to commodities that are consumed. So let's talk about equities, because most people understand equities. A short squeeze, if you watch Billions or whatever that show is called by Andrew Ross Sorkin, uh, who is lackey for financial banksters. Sorry, that's my opinion. But short squeeze is you have to borrow shares that exist to short them. So you can't create shares out of midair. So a short squeeze happens when people that are lending shares say, we're not lending it anymore, you can't short it. The same thing happens in commodities. In fact, it started in commodities when you say, I want to short silver. This happens a lot in silver. And you don't have to borrow silver to short it. You can just short it. And that's a big complaint with people with the whole COMEX and derivatives versus physical. And you know what? I don't care about that. It ends when it ends. But the point is, when your contract comes due that you're short, you either have to A, roll it, B, cover, or C, borrow. Short squeezes in the producer community happen frequently because a producer gets short. If you go back to the years of when Fibro and Buffett played their games, producer is hedged. You know, they got their silver production hedged, and it comes due, and they have to cover it and roll it back. But they decide not to cover it. They decide to just roll it back. So they just actually sell another year out. Let's say DEES is coming due. They sell their next DEES future, and they borrow silver that's above ground in a vault. And they use that silver to make delivery, and then they replace it later on because who knows? Their truck's got flat tires, they can't make the delivery, whatever the reason. The point is, the short squeeze happens when someone says, all this silver in this vault over here in that corner, it's mine. So when Paul Tudor Jones and Warren Buffett and Bill Gates and George Soros have a conversation, you know what? We think silver, there are too many people short silver on producer side. They throw a sheet over the silver, or they literally take it out and they say, this is mine. They make it unavailable for lease, and lease rates go up. Contango becomes backwardation. That's a short squeeze, folks. You can't, I don't want to say ever, you can't, but I'm going to say it. You can't ever squeeze gold because gold is not consumed, and because gold's term structure is the cost of money. Gold is gold. It's above ground. You can make it not available for lease, but you know what? It's not going to happen like silver because it's not consumed. So a short squeeze has to have a product that can be taken off the market. It's not a short squeeze if a couple shorts cover because of some news. A short squeeze rips your face off. A short squeeze happens in natural gas because there ain't no more gas. Oh, there's gas in the pipeline, but you can't take it out because then you have salt and sand to deal with. A short squeeze deals with something that's consumed that can't be moved from the market. I am lecturing people on short squeezes, Michael. Okay, I'm done. 8:27. Everyone have a great day. Gold is trading down. Surprise again. Short gold hates the teens. I think that's relevant right now. It's actually climbing back off the lows, but it went as low as 1208 area. Keep an eye on that. Keep an eye on how the market reacts after London closes. If there's going to be a bid, it may come in after that, although I'm not sure. 1227. Have a great day. It's been a pleasure. Again, anybody who's listening who brings 5 listeners and is not a subscriber,